Yo guys, welcome back to Stock Talk Insider. Today I will be talking about SoFi Technologies. It's one of our biggest positions, of course, as people know normally. So yeah, I will dive right into it, what it means if rate cuts will be cut or not be cut. A little bit about the technicals where they are now. I'm not a specialist in technicals, but just where I like to look at, where I get a little bit of confidence of. And that partnered with some of the recent market sentiment. So the stock trades at $24.91 and we're up 76% a year to date. In 1 year, if we do it like that, we're up around 230%. That's for the people who really bought it at around in the 6 to 7 range. So yeah, not letting you wait any longer, let's get straight into it. So welcome back to the channel. Today we're going deep into SoFi and especially what happens to the stock if the Fed actually cuts rates or it doesn't. And also a little bit about the housing market. I'll explain why I think SoFi sitting around $25 now is still undervalued, why I see it to $35, $40 by June 2026. And why I'm even bold enough to say $80 to $100 by the end of 2027. Let's get into it. So, taking the Q2 earnings, of course, that's the most recent one we can take as a catalyst. So, the strong Q2 2025 performance, which has revenue of 858 million, which was up 44% year over year. We have EBITDA margin of 29%, and we have a total amount of members of 11.7 million. At this point, we're already above 12 million. That's 850,000 in just 1 quarter. So Anthony Noto once mentioned, like 2 years ago, that they will do around 1 million a quarter in members growth. So that means that we're not even yet at a downtrend. We are still going up. So that's still 150,000 a quarter. We need to grow more. So that's a lot of growth still coming. So yeah. Having said that, we go to the record home loan originations. Management raised full year revenue and EBITDA guidance. Also the diverse model. So started with student loans, now a full-scale digital finance platform, lending, investing, also soon crypto and soon AI-powered tools. Recently reintroduced crypto services and blockchain payments. So having the bottom line, they have rapid growth, expanding margins a lot, and increasingly diverse revenue base. A little bit about what the rate cut scenarios can be. So scenario 1 is that the Fed cuts rates on September 17, lower borrowing costs, more demand, refinancing becomes attractive, home loan activity surges, SoFi's lending arm sees higher originations and stronger margins. Investor sentiment improves, so we have the lower discount rates boost valuation multiples. The growth stock like SoFi benefit disproportionately. And a little bit about impact on housing markets. So cheaper mortgages, more buyers enter, more refinancing, positive feedback loop, housing demand rises, SoFi organizations grow, earnings expand. And yeah, about the stock outlook, this backdrop supports your view of the $35 to $40 by mid 2026, and it does look achievable. If growth compounds, it sets up the possibility of $80 to $100 into late 2027. Of course, we will not have scenarios if we don't have a scenario B. So having the second scenario is that the Fed holds the rates. So no cut in September 17 yet. Higher costs linger, loan demand could slow, especially home loans, margin remain under pressure, and investor reaction is that analysts are conservative. Average 12-month targets sit around $80 to $20, with a high near $28. Consensus rating is mostly hold, some even sell. So the outlook is near-term down risk dilution events have weighed in on price recently, but long-term, if SoFi keeps delivering growth, the stock could still trend up toward $35 to $40 by June 2026, just on a slower curve. So maybe to the back end of 2026. So we have some analyst views in the bull case. So analyst targets are average around for the next 12 months. are around $19 to $20, and a range of the low from 12 to 14 up to $28 in the high. Ratings say that they are holding heavy, some buys and sells mixed in, of course. Why I believe that's too conservative? Well, Q2 growth plus raised guidance show analysts lag behind reality. This is literally one of the best run companies in the world, in my opinion, especially in this space. Anthony Noto is literally doing the best job he can do, in my opinion. Models don't fully price in catalysts like crypto, AI, housing market boost if rates fall. Back ratios suggest undervaluation. SoFi's growth is not priced in. Rate cuts could accelerate everything, and they're just a company with so many products. They have so many upcoming products that the banking space will not only be the one thing like the loans. That will not be the only thing that brings them the big monies, of course. So my outlook is that $25 for now is fair. It's fair. But undervalued for the long term if we look at June. So, having said that, mid-2026, as said before multiple times, $35 to $40 is reasonable, especially with Fed easing plus continued growth. Especially with the Fed easing and especially with the continued growth, because $25 will not be acceptable for me, I think. If you keep growing like this until June, then we're literally undervalued. At this point, we might say that we are at a good price. And I believe that with a little uptrend, late 2027, $80 to $100 is bold, but it's very possible if SoFi executes across lending, crypto, and AI while rates normalize and while they just keep improving the income statements. So, a little bit about some scenario recaps. So, if the Fed cut rates, it's bullish. Achievable midterm 2026 of the price range from $35 to $40 and long-term 80 to 100 possible. Mortgage demand spikes with the housing market. If the Fed holds the rates, we have a neutral to bearish type of market around SoFi, and we will have a range of $25 to $30. It can maybe go even to $22, but that's something we're going later. And long term, it's 40 to 60. So especially if you look at those catalysts and those scenarios, there's actually not a lot of possibilities in losing money on this one because it's just too steady of a company. So yeah, in this scenario also housing slows. So yeah, having said that, there are risks like the dilution, prolonged high rates, slower adoption in new products. But again, they use the dilution literally to make the company even better than it is today. It's not for saving something, it's literally for making it better, investing even more. And yeah, with all of that Anthony Noto has done until now, I just believe that there's no reason to stress out about some dilution in the long term. Yeah, for the upside, we have growth momentum, rate tailwinds, and the diversification, which is a very big one. So the call to action on this one is now I want to hear from you. Do you think the Fed cuts in September or not? That's something I really am interested in if you comment that in the comments. So yeah, if you want more breakdowns about SoFi or other stocks, I can literally do that in the most easy way for you guys if you want that. And yeah, thanks for watching, and I'll see you guys in the next one.